Stocks taking a dive despite the Fed making an emergency rate cut. Joining me is Jonathan Corpina to weigh in on this crazy action that we are having today. First and foremost, Jonathan, the Fed made an emergency cut, something that we haven't seen in years. What do you make of that?
We haven't seen it in years, but I think it was expected, right? I think the market priced that in already yesterday. This is something that Wall Street and media has been talking about for probably about a week and a half now. So this wasn't such a surprise. As we're talking now, there is a press conference going on. Going to be interesting to see what comes out of that. The good Q&A session, which always really digs into the true questions and hopefully get some answers as to what the Fed is really thinking, what their outlook for this virus is going to be in the short term.
All right, so we rallied 300 points after that cut, and now we are down we're down 300 points.
Keep it in perspective, right? We had a strong run-up yesterday, up 1,200, 1,300 yesterday in the Dow, significant move in the S&P. So this is just kind of normal activity, I guess, that we've seen go back and forth. Very, very choppy session today. I think we were expecting that, and especially with the anticipated release coming out of the Fed today. But we've seen the market move, in such variances, not only today, but in the last, 5, 6, 10 trading sessions. So nothing really surprises us at this point.
I know. What a time to be alive and be trading. So much action here on the floor. We have President Trump saying he wants even more of a rate cut. Now, it is Super Tuesday. Let's not forget that. Do you think if a Democrat was in office right now, they'd want the same situation?
I think, whoever was in office would want what's best for our country and what's best for our economy. What that answer is, we don't know yet. It's kind of you have to test it out and see what happens. Our president isn't always satisfied until he gets what he fully wants. So his comments today were somewhat expected that, he always wants a little bit more. But we'll see how the market continues to react. We'll see how the economy reacts. And we really have to wait and see how this virus dictates how everything else is going to react, right? I mean, we're kind of in the infant stages here now. The headlines 2 weeks ago or 3 weeks ago was talking about China. And now we're talking about, New York, Washington State, all different areas in the United States. So this is something that the virus is really going to dictate what the economy is going to do.
We do, and we know President Trump, he likes his rate cuts and 2 scoops of ice cream, I heard. Now, you're talking about the coronavirus, how it's making its rounds now even more in the U.S. Do you have a feeling where we're going to end today?
I don't. I had a conversation with a colleague today, and I said, if we end down 200, 300 points today, I think that would be an overall win, because when we see the market volatility that we've seen before in the past, when you have a large upswing like we saw yesterday, immediate reaction would be to sell off. I just don't want a hard sell off. So if we close down, ever so slightly, and ever so slightly now is all relative, but a 200-300 point sell off I don't think would be harmful for our markets. I think it might benefit our markets to show that we didn't get that initial, that really strong push down lower after a 4.5% move swing higher, and it might start to show us some stability over a long period of time.
All right, well, stability is something we certainly need on this volatile day. I know it's a busy one, Jonathan. Thanks for taking the time to meet with us today. That's Jonathan Corpina from Meridian Equity Partners here at the New York Stock Exchange.